All right, what's up, guys? Today is Wednesday, August 20th, and we have 3 minutes before market open. All right, so today's market open move for the trend will be bullish. So it will be a buy here. We already in a downtrend. I'm sorry, we are in an uptrend. Downtrend. We are in an uptrend already. So you can see the markets are trending up. For the hmm, this is tricky. Give me 1 second here. Risk, let me just set my accounts so that they're ready to take. So this one here is a buy. Okay. For the So let's look at something here. Price might come back to grab liquidity at this EMAs. Because we have a bunch of green EMAs. But for the forecast based, so we are rejecting off of, so let's see, it's gonna depend on, this is tricky, right? It looks like for the forecast based market open, it might be a sell. Mm, no, it's gonna be a buy as well for the forecast base. So today, the reason it depends on how this candle is going to close, because if this candle closes below this daily bearish order block, we might, and it doesn't look like it's gonna close below it, but let's see. All right, so both of them should be a buy. All right, so both of them should be buys for market open. For the forecast should be a buy. For the trend one should be a buy as well. Now, if we look at the EMAs, you can see we actually have a bunch of green EMAs that haven't been tested here. We have the 15-minute, the 30-minute, the 4-hour, the 15-minute EMA to the hourly. So price can come back down, but right now, both market opens are targeting buys or our buys. So maybe today is the day that we go and capture the all-time high. But I like how we've closed above this daily bearish order block here. We have also closed above this 30-minute bearish order block. Only thing here is that if they need more liquidity to go back up or to push up, we do have all these EMAs that price hasn't tested. So price can easily come back down in the medium term to test this EMAs here, right? So you can see what it's doing. Now, but anyway, I'm in buys for the market open entries, and we'll see how that goes. So yesterday we had a win. So yesterday was buys on both of them. And we won a nice 1:2 risk to reward. So we'll see how today goes. Now, let's look for the entry 96. All right, let's look for the SAR and EMA rejection scalps. So for EMA rejection scalps, Oh, my bad, I was on mute. If price comes back down, the EMAs that are valid is this 30-minute EMA one and 4-hour EMA one. And then the most optimal one, of course, would be this hourly EMA one. But of course, I don't want price to come back down yet because I'm in this buy, market open buys here. So we should hit this one as well if we keep pushing. So again, right, simple. This market open entry is pretty simple, especially the trend one. The trend one you're just looking at, and also this indicator I have that's based off of trend helps you pretty much to show you whether the trend is bullish or bearish. So like today, right, no brainer. You can see price was in an uptrend. Price was in an uptrend. Like you can already see that, right? So price was creating higher highs and higher lows. So automatically, right, you just enter your buy there. This other one, the forecast base, this one was tricky because if this candle before market open had closed below this daily bearish high, if it had rejected off of this daily bearish high, on the account that I take the market open for the forecast method, I would have taken a sell. But you can see at the last minute, price closed above that daily bearish high. So for the forecast method of taking the market open, you're just looking at where is price coming from. So you're looking at your order blocks. Has price broken and retested an order block? So for example, even looking back here, you can see we had stagnated around this 30-minute bullish high and low order block. And then we closed above it. We rejected on this 30-minute bearish order block. But then again, we came back below and closed above it and retested it. The final test was this daily bearish high and 30-minute bearish high. And you can see at the last minute before market open, we closed above it. But if before market open, we had rejected from this daily bearish high order block and pushed back down, I would have taken a sell on the forecast one. So I would have taken a sell on this one, and then I would have taken a buy on the trend one. So the trend one is the easiest one to enter or to look at because again, you're just looking at price action. The forecast one is kind of like relative to your interpretation of what price is doing at order blocks of or what price is doing or where price is rejecting from. All right, so we are pushing up. So that's good. It's good that we are not coming down just as of yet. So probably the same thing. So if you guys remember yesterday, you see what happened. We did the same thing. There was a 15-minute bearish high and low order block up here where price rejected from and came all the way back down. And just again, remember that we do have what is it? We do have the all-time high is at 45,280. So yesterday we came pretty close to the all-time high, but we rejected from it. Um, so today might be the day we go and touch the all-time high and possibly even break it. So we'll see how this goes. So of course, price, and you see this 4-hour SAR right here? This should act as a magnet for price to get to right here. So this might be the place price, if any rejection might happen, might be all the way there. So knowing that we have this 4-hour buy at 45,144, that kind of gives me nice confluence that this market open trade will get to TP. So we'll just wait and see if we reach here. There's something else I was looking at here. Let's see. All right. Mm. All right, so we'll keep waiting to see what we get. Oh, also today we do have FOMC, but this is the FOMC that I don't mind trading the morning session because today is the FOMC without the so let me refresh this. Today's the FOMC without the press conference. So the FOMC that I care about is the one that happens at 2 p.m. Eastern time, and then there's a press conference at 2:30. So today's FOMC news event is just the meeting minutes. So in my experience, that doesn't move the market as often compared to the other one. So the other one is definitely the one I do not trade pre FOMC. So like the morning session, and I think that happens how often? Maybe once every 3 months or something. But yeah, so today's FOMC, like I don't mind trading. I don't mind trading it pre-market. Oh, I'm sorry, pre-FOMC. All right, so today we blasted past today's pre-market high. We rejected from Mondays and Tuesdays pre-market high as well. And we're having a pretty heavy rejection back down to the downside. But I still expect price to push up. So probably the only one of the reasons why price might be coming back down. Again, remember we do have, right? So if you expect price to go in a certain distance or in a certain direction, right? There has to be confluences or there has to be reasons why it should go there, right? So here you can see all EMAs are green, like literally all EMAs are green. However, we do have EMAs that haven't been tested. So for example, uh, we do have the 30-minute EMA one. So when price broke and closed above the 30-minute EMA one, it did not come back to test it. Again, it doesn't mean that every EMA has to be retested when it gets broken, but right, it is probable that at some point it gets retested. The 4-hour EMA one hasn't been retested as well, and the hourly EMA one again hasn't been retested as well. But again, like I still if anything, any down price movement might be temporary, maybe bouncing off of any of these CMAs before pushing back up. Um, but we do have this big, you can tell we do have a lot of buyers in the market, right? We definitely pushed up almost to almost 100 points from market open. Right, we do have sellers pushing, and it's probably this daily bearish order block that is attracting price back down. But you can tell there are a bunch of buyers in the market that are holding price up. And again, up here, we do have this 4-hour SAR that was created, I believe, yesterday. So that should also act as a magnet to push price, to continue pushing price up. So we'll just keep waiting. All right. So remember what how it said before, we may need to come back and test EMAs. So there is a 15-minute SAR here. So I would rather take the 15-minute SAR 895. So this is what? 895 minus 10, 885.6. So somewhere there, add alert. Um, there's also an EMA running. The SA, this is a bit tricky. The SAR is the most optimal one. Um, and we just tested it. So I'm in the 10-point entry, and then I am waiting for, so I'm in the Model 1 entry, which should be this. I am waiting for Model 2 and Model 3. So the market open entries may get stopped out today. We'll see. But again, right, as we mentioned earlier, if price is going to go up, and I'm in Model 2 and Model 3 entries. So as I mentioned earlier, if price is going to, this is Model 2. If price is going to go up, it has to come back and pick up liquidity somewhere. And the liquidity was or is at the, did I even enter this? The liquidity is at those EMAs. So we had a bunch of high time frame EMAs that hadn't been tested. And so we've tested all of them. So we've tested the hourly one was the most optimal one. We had the 4 hour and then we had the 30-minute and 15-minute. So we tested all of the EMAs that hadn't been tested. So if price is to go back up, this is the point where it should go back up. Um, and let me see. All right, so Model 2 and Model 3 have been stopped out. So yesterday we had one win. So give me 1 second. Also, the market open ones have been taken out as well. There is a 30-minute SAR here. However, I won't take this one because let me see. There is a bearish order block that's 50% of this SAR. So this 15-minute bearish order block is 50% of it. And also, I know we've just or we are rejecting back to the upside. Um, so anyway, so for today, minus 0.75 for that SAR one. So, and yesterday and also for the market open ones, yesterday we had a 1:2 win for the market open. Today, we have one loss. So we are still up for the market open entries. But again, I still expect US30 to come back up at some point to get to the all-time high. But yeah, so that's another reason why the market open ones, you want to go for a 1:2 risk to reward. So that if you do take a win, so for example, from the win from yesterday, this one right here from yesterday, um, from the win from yesterday, that was 2 points win or 2% win. But again, I did say that for you guys, it's probably better to risk 0.5% for the market open because there are days, again, for this backtesting, like I showed yesterday, I backtested since January. So there are times for the market open trades, you will have 8 back-to-back losses. So there are times where you have 8 back-to-back losses. And with that kind of statistic, if you're risking 1% per trade, so the idea behind the market open trades, you're just looking to take one trade a day. So whether it's you either lose 1 R or you gain 2 R, right? But over time, and I was reading the statistics yesterday, over time, it's very profitable. But there are times whether you're taking the forecast method of taking the market open or the trend-based method of taking the market open. So the trend-based is to my right, the forecast is to my left. There are days when both of them will go the same direction. Like today and yesterday, both the forecast and trend-based methods were pointing for a buy. There are days where one will be a buy, the other one will be a sell, and vice versa. But yeah, so for those ones you want to just take one trade a day. If you get stopped out, well and good. But the only thing that I've seen is, and we'll see if this happens today. Again, I'm not looking to take this 30-minute SAR because we do have an order block like 30%, I'm sorry, 50% of the TP. And we'll see if this happens. So in the past, I've noticed that when I was backtesting, if you get stopped out of a market open, and I'll just use the forecast method, which is what you're just relying on the price action of order blocks before market opens. If you get stopped out in the first 30 minutes or so by like such a huge candle, and the candle that stops you out, again, it has to be in the first 1 hour of market open. I'm sure, probably 30 minutes or so. If the candle that stops you out rejects heavily off of an order block, like, so for example, if you're buying and the candle that stops you out rejects heavily off of a bullish order block, that means price is probably recovering back up. So you see what happens here. So if we pull to the right, what order blocks did this reject from? So it rejected from a 30-minute bullish high, a 30-minute bullish low, and a 15-minute bullish high. We also do have a 15-minute bearish high and low. But in my experience, when you get stopped out, or in backtesting since January, every day since January, the days where you get stopped out of a market open entry and the candle that stops you out is having a heavy weak rejection off of an order block in the same direction that you are expecting price to go, price is normally just going to go back up into your area of profit. Because again, the logic behind all of this, even before we started the call today, we did see a bunch of EMAs that hadn't been retested, and we knew there were some order blocks here. So and give me a second here. So price just closed below EMA 2, but we don't have an area of supply here, so never mind. Yeah, so I would be curious to see how this will go, because it is easy enough for price now to go all the way back up. And again, it doesn't have to happen, but from backtesting this forecast method of the market open, the days you get stopped out in the first 30 or so minutes of the market open entry, and the candle that stops you out has a heavy rejection off of an order block. I just don't like it's rejecting off of a 30-minute bullish high and low order block. If it was an hourly order block, then it would have been much better. But and let me see if we can do this. Let's see. If we go here, let me see if I can find, I just don't remember what month that was, but let me see if we can find, or I can find an example of what I'm talking about. So we'll just start all the way from January. But anyway, we're done with the market open entries. Again, it's just the market open entry, you're literally just taking one trade a day and that's it. But here, let me see if I can find one of those examples that I'm talking about. So we're looking for one, and of course, right, as I said yesterday, January and February were uh, terrible months for market open, because especially for the election. Wait, I think this might be one of them here. So if we replay this, I want to see how this one went. Okay, let's see. This one rejected off of a 30-minute bearish one. So this is not the best example. It's close to what I'm thinking about, but it's not the best example. So let's see if we can find, but this is what I'm talking, this is the pattern that I'm talking about. Like getting stopped out the first 30 minutes. And yeah, you see that? That's exactly what I'm talking about right there. Um, so you see how price came down. I just don't like it was the 30-minute, but on the other hand, for this particular one, since the market open is literally just one trade a day, you really don't want to re-enter. So if you're going to re-enter, if that happens, you probably just want to re-enter on a separate account because again, for the market open, you're literally just looking to take one trade a day. But you see that rejection back to the upside. Let me see an exact example of what. So we are looking for one that will get stopped out here and see if that's gonna happen. Not that one. Let's see, we need rejection. And I wish there was a higher replay speed here. Wait, give me a second. I might have missed that one. Yeah, so here's one. There it is. All right. So this particular one right here. Yeah, yeah, this is what I was looking for. So this is what 28th of January. So 28th of January, the first 30 minutes, right? And then you're looking for, so if you get stopped out of a market open entry, and this is on the forecast method, because the forecast method is what you're using, you're just looking at where price is coming from before entering. So this particular one, you can see in the first 30 minutes, you get taken out. And this particular day, there was only a 30-minute bullish order block. So we didn't like today, what I don't like about this is that we also have bearish order blocks here. So it's not just like, it's not just bullish order blocks. And then we have a heavy rejection back to the upside, right? So the market open, what? It's 100-point stop loss. So this candle went and stopped out and then rejected back up like 50 points, right? So half of the stop loss. And then uh the and then went back up, right? So on days that, and I may forget to see this depending on what I'm looking at on the charts, but If we take and remember, for the market open, there are days on one account I'll take a buy, there are days I'll take a sell. But on days that on the forecast method, which is what we are looking at, where is price coming from? We're also looking at this forecast indicator that I have, which is also helping to kind of show the direction that market will go at to a certain probability. But if we get stopped out, because for me, I won't be looking to re-enter any market open trades. But if we get stopped out in the first 30 minutes, it has to happen in the first 30 minutes. So the because this market open entries, they hit TP or stop loss within an hour. Some of them go, if the market is ranging like Monday, the market open entry went into the next day. So in consolidating markets, right, there are times that entry will keep going for like a day. But if in the first 30 minutes that trade gets stopped out, then you look at the candle that stopped you out. If the candle that stopped you out is rejecting off of a order block in the direction that you're expecting the market to go, pretty much price will revert back up because the whole analogy of the market open or the whole analogy of even this forecast indicator is, it's just asking you where is price coming from. So we are looking at the wicks. Where are the wicks rejecting from? What's the price action doing? So if you get taken out and you see a heavy rejection back into the direction you're looking for, you can look to either re-enter or you just enter on another account. Personally, I am not entering multiple market open trades. So for the market open, it's literally one trade a day. So for example, like, last week, Monday, Tuesday, Wednesday, and Friday were winning days. There was only one losing day. So like last week, 4 times 2, 8. So last week I made 7% on the market open entries because there was only one losing day. Yesterday was a winning day, so made 2% yesterday. Today lost 1%. So I'm just literally just taking one trade a day. But then, right, I have two separate accounts for the market opens, so that one of them I take the forecast entry and the other one I take the trend entry, the trend-based entry. The trend-based entry is the easiest because again, you're just looking at what is the trend before market open. If the trend is bullish, you enter a buy. If the trend is bearish, you enter a sell. For me, it's not as easy as that as well because I'm also using this indicator that I have that is trend based, which is pretty much how most of my candle colors are. So if I'm seeing the trend is bullish, I don't even think twice. Literally at 9:30, I enter that. The forecast one, which is this one right here, that's the one that's a little tricky because you literally have to kind of look at multiple factors. But for the market open one, I do not look at the zones. I do not look at I do not look at the zones. What's the other thing that we normally look at? Zones, EMAs. I don't look at zones. I don't look at EMAs. I don't look at SARs. So for the market open for the forecast, I just look at this forecast indicator right here. And then I look at where is price going. So today we knew that as much as we were in an uptrend, we did have EMAs that hadn't been retested. We did know that there was this daily bearish high order block here. So we did know that as much as the trend and the price action was showing a bullish nature, it was likely that price would come back down. I was hoping it doesn't come back down all the way to stop loss, but it is what it is. But it was likely that price was going to come back down and pick up some sort of liquidity for push up. And mostly the liquidity here was EMA based because all of these EMAs that are now red were green before then. But right now, EMA for any EMA SAR rejection scalp. So currently we just took one loss for the SAR right here. EMA, all of these EMAs have been retested. So unless we push back and close above any of these EMAs, and mostly it's going to be for a buy because we are in a demand zone. So the nearest one we might get here is a 30-minute one. So in the 30-minute, see, not even the 30-minute. We're probably no, we're not gonna get the 30-minute one. Yeah, so the nearest one we can get here is a 15-minute. So price has to push all the way back up and close above EMA 2 and EMA 1. And then at that point, that's when I would look to take a rejection scalp for a buy here. But price has to come back all the way up here. If price wants to keep pushing down, well and good, because if it pushes down, uh, it's probably going to create an SAR level somewhere here. If it creates the SAR level next to this daily bearish order block, I'm not going to take that buy. So it has to create the SAR far away, either further above this daily bearish order block. So probably closer to this hourly bullish high right here, or even lower at this particular one right here. And then at that point, that's the only way I would take a buy. But if it creates an SAR next to this daily bearish low here, then of course I will not take that buy. So at this point, it's just a matter of waiting to see if maybe we can come back and close above this 15-minute EMA. All right. Let's see. 786. Mm, 6.4. Let's see if we'll get a rejection from here. Let's see. Okay, yes, so this would be actually this is a very good area for uh all right. So I'm in the 10-point entry and darn, this is messed up. Uh-huh. Okay, I'm in the Model 2 and Model 3. I got in a little late. Oh, did I know? Uh, wait. Give me a second. I'm only in the 10.1. Give me a second. Need to wait for price to come back up here for the model. I messed up this accounts. Let's see if it comes back. If it comes back up here where this X is, um, right now I'm only at the 10.1 here. I didn't get a chance to, man, this is happening so fast. Um, if it gets back up here, give me a second. If it gets up to the green again, I'll re-enter, or if we get a new model. All right, so there's the green. So I'm entering model 2 and model 3 because that's a structure change and a trend change. Um, all right, so let me see. That's that account. Okay. All right. So it's this one. So let's see how this goes. So this should be 1:1, 1:1, 1:1.5. And then the 10 point. So the 10 point is the one, and I ended up entering the 10 point thrice. I thought it was the other two accounts. But anyway, so we'll see if this comes back up here. It just happens so fast. Let's see. 786. 786.8. 777. 786.8. Minus to one by. All right. So that's the current one. That's this one. And then there's this one. All right. So full TP on model 3. So that gets back to let me see here. This one was, give me a second. 778. All right, perfect. Yeah, I'm out. I still have the Model 1 running and Model 2. 778, 768. All right. Anyway, so today back to break even. What is this? What is this? B E. we'll see if this others will hit. So the 10-point entry is still going. Model 1 is still going, and Model 2 are still going. And we'll see if those end up hitting as well. If not, it is what it is. There's need to look at. mm, 86. What happened at 786? 786. 776. All right. So I'm still in it a little bit. I have some slippage here. Let's see. I had a terrible entry for this. For Model 1 and Model 2. Let's see. We push higher. Let's see. Two. All right, I'm out. I'm out of Model 1 and Model 2. Um, okay. So back to break even on one account. One account, I'm up 9, should be 1,000. Anyway, 980. Um, the other one, 2,300. Okay. And maybe this is the part where this thing goes all the way back up, probably. For this one. One, two, three. Mm, This one balanced out. Great. Um, let's see. Oh. Huh. Uh, All right. I don't think there'll be anything else for the day. Um, wait. Let me take a screenshot of this for my journal. But yeah, I don't really think there'll be anything else for the day. I still think US30 will push back up and probably go to the all-time high this week, 44,904. So the first loss was, it's not that one. Let's see. I mean, even EMA wise, we do have a daily EMA one that hasn't been tested down here. So we'll see. It's at 737. All right. I mean, I can hang back for a couple of more minutes to see if we are going to come back down and retest this. But just want to make sure that this daily bearish order block is okay. So for the time being, it is far away from the entry. So yeah, so I would take this if it comes in. I'll hang around for a couple of more minutes to see if we get a correction back down to the downside and see if we can take this. First entry, this 15-minute sell, this first loss, 44,905. Yeah, sells here. Still bound. 495 here. Let's see. And this one, 44, 786. All right, so price has to get to this daily EMA one in the next 13 minutes for me to take that buy. But of course, we're being held by this hourly bullish order block here. But if we can get a nice spike down, then this does look like a nice entry here. 89. All right, that will be it for today. We have 5 minutes left before 11, and I don't see the probability of price dropping 50 points in 5 minutes. We do have this bearish low order block here, but we just have this tug of war between the bearish low and the hourly bullish high. So I don't know. I don't think price will get down here before 11. So today, the market open entry lost, but yesterday it won for 2 hour. So between yesterday and today, we're positive one for the market open. Um, and then for the official trades, one loss, one win. So at break even, and we'll see how tomorrow goes. But other than that, I will see you guys tomorrow. Have